Hey everyone, Drew Creekmer here, Wealth Advisor with Creekmer Wealth. Hope you guys are doing well. In this 5-minute finance video, we're going to talk about one of the most important topics in investing, and that's investment risk. We're going to talk about what it is at a high level standpoint and what is important to understand about it and what you can do to make sure that you have the right amount of investment risk in your portfolio. At a high level, investment risk is the potential for loss or a potential for pull down or a volatility of an individual investment. And typically, in return, the greater the investment risk, the greater the potential return. So it's really important for you to understand, one, how much risk do you need to take to generate the necessary return for you to achieve the financial goal that you have. Additionally, there's so many other inputs that come into play here. Your age, how old are you? How long do you have until the financial goal in question needs to be achieved? Additionally, there's the individual side of this and the emotional side. Are you able to withstand large drawdowns in value? A great example of this is March of 2020 when we saw the coronavirus pandemic really flare up, and we saw initially a large shutdown of our society and economy. And in return, the stock market went into a very drastic pull down of 30+% over the course of a number of weeks. For those individuals that truly understood their investment risk and had a clear plan for their investment portfolio, they did fine. That said, though, I did talk to some people later in the summer who just didn't know how much risk they had in their portfolio or didn't have a clear plan of if that risk was right for them. And they made decisions where they sold or they made moves on the way down and then were scrambling to get back into the market as we recovered later on in the spring and early summer. And so what I would encourage you to do is to start at a real basic level. The general rule of thumb that's out there is take 110 and subtract it from your age to find out how much of your portfolio should be invested to stocks. For example, if you're 50 years old, take 110, you subtract it by 50, you get 60. So that is 50-year-olds should have 60% of their portfolio in stocks. Well, generally speaking, that's a pretty good starting point. However, it may not be exactly right for you and your situation. A great example of this is as we continue to see the life expectancy or how long someone is living continue to expand, and we see interest rates being so low, we're seeing a lot of folks needing to take greater investment risk or have more money invested in stocks in order to achieve the financial goals that they have and live the retirement lifestyle that they desire. And so while that general 110 rule may work in general, and it's a good starting point, it may not be right for you. And you see this shirt here I have on, Fearless Week. This shirt is from a company that we utilize called Riskalyze. Their goal is to help everyone be a fearless investor, and they do so by helping you pinpoint the exact amount of risk that you are comfortable with in your portfolio so you avoid, one, the emotional and potentially damaging behavioral reactions to extreme market volatility, and two, ensure that you have the right amount of risk in your portfolio. And we're going to include a link to their questionnaire in this video, and I would encourage you to take a couple of minutes and go and answer those 5 to 10 questions. You'll be assigned a risk number and have a pretty clear idea of how much risk you're comfortable with on both the upside and the downside. And then after you determine that amount of risk, give us a call if you haven't figured out if that risk is what you need to have in order to achieve the financial goals that you have for your life. And everyone that I've done this with has been increasingly surprised to see how much risk they're actually comfortable with and then compare it to how much risk they actually have in their portfolio. And I think it's a great exercise to do after we have had a really incredible market run in 2020. It's a great exercise to assess how much risk you have in this moment and determine if that amount of risk is something that you're comfortable with. Take the returns that you have received in the last number of months and begin considering, do you need to reduce your risk in order to prepare yourself for a possible pullback or to prepare yourself for the long-term game plan, which is to achieve the financial goals that you have for the rest of your life. And understanding your investment risk is where you need to start in order to do that. So take that quiz. If you have any questions, shoot us an email, drop a comment here, give us a call. We'd love to chat with you and just help you understand how much investment risk you have and how much investment risk you truly need to have. Once again, thanks for the time. Hope you learned something new. Look forward to talking to you soon.